Hello and welcome to PQ Prime. A very good afternoon to all the viewers. Clearly, if you go to see in terms of the markets, quite an interesting day of trade. After the Fitch downgrade with regards to US, it's having a domino impact in terms of other European markets as well as Asian markets as well in India. Taking into consideration the valuation at what we are trading at is not spared at all. In fact, interesting to see how we slipped below the 19,450 mark in intraday trade as we speak. But from the lows, we have recovered now almost 500 points and we're trading at levels of around 19,522. In fact, Bank Nifty as well has been one of the key drivers of this kind of a fall in today's session and a mild recovery on that front as well. Now, the key question from here to ask is whether I mean, from an overbought zone that we are in terms of the markets, is this consolidation phase expected to continue or not? And is this a good correction or a bad one? I mean, for a bull or a bear? Joining us on this one to discuss more is Rajesh Palviya. Rajesh, good afternoon and welcome to the show.
Good afternoon here. Yeah.
Rajesh, after the Fitch fallout, I beg your pardon, that's actually shaken up the markets from being in an overbought zone. We have managed to slip below the 19,450 mark already in terms of intraday trade. No mild recovery has come in. What's the trend that you're picking up? What's the derivative data indicating so far?
So, market was waiting for correction, and this Fitch downgrade has given a trigger to the market for some corrective move in the today's session. Yes, there was a significant profit taking was there in the market throughout the session, and almost we have reached to the level of 19,450 for the Nifty. But again, from the lower level, again, as you spoke about the derivative data also, yeah, 19,400, 19,500 is having major put concentration, which is likely to act as a support area for this corrective move, which we are seeing. So as we have already marked a high of 19,900 kind of level, and then from that level, it's almost 400, 500 point correction. So in this kind of bull market, these kind of corrections are always a welcome move by the market, because those who are left out, those who have missed the opportunity to buy the market, they were now getting the opportunity again to re-enter in the stocks where they are, planning to buy and to invest. As overall scenario for market on the short to medium term perspective is on the bullish side. So this dips are going to get again buying interest. 19,400, 19,300 are the key support area for this decline. Till we are holding those level, I think again market will get buying interest, and some pullback action we can see in the market from current level also, and possibly 19,650, 19,700 are likely to act as a resistance. So some consolidation we can see in the Nifty, but again stock specific buying action is going to emerge as we are holding very much 19,400, 300 the put based concentration area.
Right. Rajesh, as you mentioned as well, now clearly the put writers are dominating with strong action at 19,800 levels already, right? Now, clearly from here on, you already mentioned the resistance and support zones. How likely are we to actually go as low as the previous record highs of 18,887 and then see a bounce back from there?
That possibility looks a little on the lower side, as the in the today's fall also we have seen again put writers have added their position at 19,400, 19,300. All strikes are attracting the put writing, so it clearly shows that these dips are used by the put writer to initiate their short position on the put base. And again, on the higher side, the call writers are active at 19,600, 700 strikes. So that are likely to act as a resistance area. But 18,800 possibility looks difficult in this continuation of this fall, as our structure on the near term to short term is very much intact. We are trading about to all its important moving averages. 50 to 100 day moving average is very well held by the market. So I think 19,300, 19,200, that are the major level where again market will find good support area in this decline.
Right. And how are you looking at bank nifty overall? What's the data indicating so far?
Yeah, so in today's corrective action, almost Bank Nifty has reached to the level of 44,700, which is a very important support area for this near-term trend, and we have seen a significant pullback action from those level. Now again, we are almost trading near to 45,000, above 45,000 level. So 44,700 is the key level on the downside, as most of the put writers have created their position at 44,800, 700, even 44,500. These all strikes have attracted the put writers in today's session. So that level is likely to act as a good support area for this corrective move. If at all we breaks below 44,700 on closing basis, then possibly furthermore corrective move can extend, and then Bank Nifty can slide towards the 44,300, 400 zone. That is the next level which we can see in the continuation of this downtrend. But today's low is very much important for the market. 44,700 is the key level to watch for in the coming trading session. If we hold those level, then some pullback can be there. 45,200 to 300 are the key supply zone, as in today's fall also we have seen call writers were aggressive at 45,500, 45,300 strikes. So that levels are likely to act as a supply zone for the Bank Nifty. So for Bank Nifty, we are expecting a range bound session towards 44,700 to 45,300. This could be the possible 500, 600 point range where a market can consolidate for some time.
Okay. And if you see in terms of heavyweight participation, how are you looking at names like RIL, HDFC Bank, for that matter, Infosys? Because again, to see that bounce back in terms of markets participation from these names is going to be absolutely crucial.
So large cap stocks, we believe that already rallied, and I think some consolidation we can see in the stock like HDFC Bank, Reliance, as well as Infosys. All these large cap stocks may remain in the sideways for some more time, as we are expecting that Nifty may also remain in sideways for some time, and then again we will see a resumption of the uptrend. But meantime, we can see some rally in the mid cap and small cap space. That space is going to continue furthermore buying interest, and we do expect that mid cap stocks can show good traction, and sectoral rotation can be another play where we can see buying interest is going to continue, like sector like pharma, sector like FMCG, even the real estate space. These three space are looking attractive, and we believe that some buying can be there in these three space for some couple of trading sessions.
Okay. Let's look at a couple of other individual names as well. You have the likes of a PVR Inox. The stock is seeing some long position build up in today's session. What should the strategy be?
Yeah, clearly. So in today's move, also PVR has shown good built up, and again, stock managed to give breakout above its 200-day moving average. And today's close is very important for the stock, as stock is now very well holding above 1580 level. So if it continues to hold above 1580 level, then possibly some more upside we can see in the coming trading session towards 1660, 1680. So overall structure for PVR is on the bullish side. One should hold their position, keep stop loss of 1580, upside target is 1660.
Right. Let's look at a couple of other names like a Polycab, India Bulls Housing Finance, Escorts. All of these counters are seeing, short covering in today's session. What should your strategy be?
So Polycab, yes, some mild profit taking was there in last couple of trading session, but if you analyze the overall setup for Polycab, it's in bullish territory. This minor corrective action should be used as a buying opportunity in the stock. 45.50, 45.40 are the key important support area for this near term setup. So if it stocks hold 45.40 level, then again we expect that stock can again exhibit the upward momentum. Once stock manages to cross above 46.60 level, then it will resume its uptrend, and possibly on the higher side 48.50 to 4900 could be the possible target on the Polycab. So overall setup is bullish. 45.40 should be your stop loss. India Bull Housing Finance has recovered quite quite well post this July series. In the continuation of this uptrend, which we are seeing since last 2 week, we expect that if stocks continues to hold above 142 mark, then possibly this rally can extend towards 165, 170 zone also. So very strong buying action has been there in the stock since last 2 weeks, and we expect that on the weekly chart, stock has given a breakout. So 165 is the near term short term target. Keep your stop loss at 142.
Right, Rajesh, how are you looking at a Gale and a Bosch in trade?
So Gale was in uptrend. Stock has given some kind of profit taking in the last couple of trading session, but still overall setup for the Gale is on the bullish side, and we expect that if stocks holds above 113 level, then the trend is likely to remain on the bullish side. One should use this decline as a buying opportunity. 113 should be your stop loss. And on the higher side, once the stock manages to cross above 119 level, then possibly this stock can again continue its uptrend, and then possibly next target for Gale should be around 126 to 128. If we analyze the Bosch, some profit taking is happening in the stock, and now stock has given a breakdown to its important support area of 18,600. So if it's continuously to trade below 18,600, then some more profit taking we can expect in Bosch, and then stock can go down further towards 17,700, which is the next important support area. So wait for some more corrective action in Bosch towards 17,700, and then review it. I think stock may correct furthermore from the current level, as stock has given a breakdown of 18,600.
Right. Two stocks I want to talk to you about is the Sanghi Industries and Ambuja Cement. Bloomberg reports are indicating that Ambuja Cement is looking to buy majority stake in Sanghi Industries. What are charts indicating, Rajesh, for both these names?
So very strong buying action in Sanghi industry since last three trading session, and I think stock is logged 5% in today's session also. So looking at the setup, yes, if it's a hold above 98 level, then possibly another round of buying interest we can see in tomorrow's session also, and possibly stock may hit again upper circuit also. As today we don't have any buying opportunity as stock is already logged. So I think 110, 115 is the next target for the stock. Your stop loss you can trail on the higher side. 97 should be your stop loss. Looking at the Ambuja Cement, yes, stock is looking bullish. And looking at the near-term setup, we expect that if stocks continuously hold above 448 level, then possibly Ambuja Cement can scale up further higher towards 475, 480, which is the immediate resistance area on the higher side. So hold your position in Ambuja Cement also, as stock is looking positive on the near term. 475, 480 should be the target in the near term basis.
Right. And very lastly, Rajesh, any other recommendations taking into consideration that we've seen a correction in today's session that investors should look at buying?
So as I mentioned that we are bullish on the pharma space, and we do expect that pharma space can continue furthermore upside. So from that space, Lupin is looking very attractive, and we expect that Lupin can continue furthermore upside. 1030, is the near term target for Lupin. Keep your stop loss of 980. Another stock that we like in this corrective move, that is Berger Paint. Stock is almost trading near to its day high, and the kind of traction we have seen in last week as well as the follow-up buying in the current week is clearly indicates that Berger Paint can scale up further higher from the current level. 745, 760 is the near-term target. Keep your stop loss of 705. Another stock that we like in today's session is that is Polymat. Uh, if we analyze the overall setup, stock is forming higher top, higher bottom formation on the daily as well as on the weekly time frame. And looking at the breakout on the weekly chart, we expect that if stocks continuously hold about 1230 level, then it should scale up to the level of 1350, 1400 in the short term. So Polymat is also buy at the current juncture. And another sector, as a sector, we like the FMCG. So some of the stocks from FMCG pack, that Marico and HUL is also looking attractive. So one can look at these two stocks also for trading perspective in the near term setup.
Right. So these are few names one should be watching out for as well. Thank you, Rajesh, so much for sharing those views and giving those recommendations as well to the investors. But clearly, the pressure does continue. A low of 19,423 is what we've hit in intraday trade, but a good recovery from the day's lowest levels to the tune of little over 100 points is what we've seen already at 19,537 in terms of Nifty 50. Similarly, if you see in terms of Bank Nifty as well, from a low of 44,720, we have recovered quite a bit, and now we are trading around those levels of 45,050 levels. So, an interesting move coming in on that front, but the breadth continues to remain in favor of the bears. And if you see on Nifty 50, you just had around six stocks that have advanced in it, and all of these six, if you go to see, coming from either the I mean, it's a Divis Laboratories, Nestle, HUL, Asian Paints. So interestingly, it's the FMCG and the consumption pack that is showing some bit of strength in today's session, as well as the Tech Mahindra, which sees minor gains of 0.3%. But clearly, it's the metal pack as well as the auto pack that has been trading absolutely weak, and the auto pack has been showcasing weakness after the July auto sales numbers that have been reported so far. So overall, an interesting day of trade. The markets, which have been in an overbought zone, have been seeing selling pressure mirroring what's happening in the global markets on the back of the downgrade of the US markets by Fitch ratings. And let's see for how long does this kind of downtick continue in trading as well. That's all that we have in this session. Thanks for watching. In fact, lots more lined up on BQ Brand throughout the day. Please stay tuned.